What's up, everyone? All right, so here we are finishing the morning up $811. This is actually, this is the smallest green day of the month. And, you know, $811 is still a great day. I haven't lost sight of the fact that 5-6 years ago, $800 would have been like an amazing day. $750, I would have been so excited because at that time I was probably only averaging 150, 250 a day on really decent, good quality days. So to be in a place where now I'm averaging 5,000 to 8,000 in a good market on a good day, making only 800, it doesn't feel like a lot of money, but that's the time where it's important not to lose sight, not to become detached from the reality that this is a lot of money. So feeling good about that, and it's another green day. It's just momentum today was a little bit slower. If anything, I over traded today. I took, I don't know how many trades. It must have been like 15 trades or something. I mean, it was just getting in, getting out, getting in, getting out. And, I kept taking stabs at things and they'd only pop up maybe 5 or 10 cents. So lots of small winners, one bigger loser, and wasn't feeling it. So I did something that it's kind of rare. I said, you know what? I'm going to call it a day. Instead of pushing my luck, I'm just going to call it a day. Up 800 is great. I'd rather be up 800 than down 1,500. And it could happen just like that on a day like today when the momentum's not too hot, more false breakouts. So I'm taking the money, $800, and I'm done for the day. And I'll be back at it tomorrow. Hopefully we'll have a better day and we can finish up this week strong. So I'll break down today's trades and today's midday market recap. And as usual, any questions, any comments, leave them below. If you enjoyed the video, give it a thumbs up. All right, enjoy, and I'll see you guys first thing tomorrow morning. All right, everyone. So we're gonna break down the trades from today, finishing the morning up only $811. Kind of a little bit of a slower day for me. This is the first day this month that I'll be closing with anything less than either $1,000 of profit or $1,000 of loss. So this is every day this month so far. I've been either down more than 1,000 or up more than 1,000. I haven't had a day that's just a three-figure day. So kind of a little bit unusual here, but I think the thing is, typically on a day like today when we don't have a lot of momentum, this wouldn't be a green day. This would be a red day because I would have kept pushing it. And, I would have inevitably had another loss like this one on Smith and finished the day down, $1,500 or something like that. So today's actually a good day in the sense that I'm kind of maintaining the composure and just saying, you know what, market's not really, really hot today. I'm just going to step out of it before I do something stupid, before I risk an unnecessary loss. And that's something that I wish I had done last Thursday when I had a red day. It was totally unnecessary. So today, really kind of followed the rules a little bit better there, and so that's a good thing. Now, you can see the stocks that I traded this morning. Today was kind of interesting because the leading gapper, the one that I traded right out of the gates, this was SMIT, S-M-I-T. So again, for us, every morning starts the same way. It's breaking down the scanner. So it's finding, the 1 to 2 stocks in the market with the potential to move 20 to 30%. You can see SMIT is up, SMIT, 58% right now. So if I run this for historical time at 9 in the morning, you'll see that SMIT, let's see, historical date, there it goes. Actually, let's run it for 9:15. There we go. So SMIT, you can see, was our leading gapper, up 45% at the time, and it was at $3.43. This had everything we look for. It had, it was the right price. It was a lower float. It had news. It was up 45%. It had decent volume. So I was watching it for a break of 370. And here's the thing that's kind of a bummer on this one. It broke that level pre-market. So right before the bell rings, it pops up to 380. So it had already started to break that level pre-market, and when the bell rings, I was just a little bit, I wasn't totally sure how I wanted to trade it. I ended up getting in at 390 and 395, but then it hit a little resistance around 4. So, I took some profit at 405, 407, and with 7,500 shares, it was like a $400 winner. So, it wasn't a home run like some of the other gap and go stocks that we've traded in the last couple of weeks. It was just kind of a small win, 400 bucks. It drops down, it comes back up. I get back in here for the second break over 4, looking for a move to a high of 410, 412. On that one, I don't know, it was basically a break-even trade. I added back at 405 and 403 and 408, and then sold at 408 and 398. So it wasn't a very good trade. I think I maybe was up 500 and then lost 100 or something like that. And then I got back in for one more stab right here at $4, and you can see how it did this big rejection. It popped up and then it dropped all the way down on this red candle, and right there I lost like 1,600 bucks. So I went from being up 400 on it to down 1,200. I already had a small win on another stock, so at that point I was down about $500 on the day, and I was like, okay, you know what? I got to be careful. This is my first red day in a week. I was red last Thursday, and so right now I am red. I got to be careful. I don't want to make this day worse. I want to try to get out of the hole, but be smart about it. And so the next stock was MTSL. MTSL, again, we traded it yesterday, traded it again today. A nice move here from 3 up to 350, a pullback, right here a flag, and then a move up to a high of 370. So made some money on that one, 1,100 bucks. Again, not a home run. It just felt like, I don't know, it just didn't feel really clean. It kept popping up and dropping. You can see this drop right down here. Another drop, let's see, where is it? Right in this area here. So, it wasn't the easiest one. Only made 1,200 bucks on it. So that got me out of the red and into the green, which was good. Small win on MYO, off the scanners, jumped in for the break of $3. It hit a high of 307, and then it came back down. So, only 600 bucks on that. PED, this one hits the scans from 270 up to 320. Did a little bit of a pullback here, but again on this one, really didn't do that well on it. Only 400 bucks. So small win. And TRT, another one, I jumped in with 200 shares and got stopped out with a 50-cent loss. So, just kind of a blah day. It wasn't super exciting. Making $8,000 yesterday was a great day. Making $4,000 the day before and $7,500 the day before that, those were great days. Today's a day where I didn't do anything differently. The market just wasn't hot. But so this is kind of the thing that can be difficult for traders to understand, because they think, geez, I did the same thing today that I did yesterday. Yesterday I made $8,000. Today I made only $800. What gives, right? I don't understand. So even if you do the same thing every single day, it doesn't produce the same results because the market is different. So there are days where the market is going to be stronger, and you're going to see stocks go from $3 to $4 to $5 to $6. And then there's going to be other days where the market is just sluggish. It's a little slower. Stocks at 3 will only go to 340, 350, and then come back to 3. So, that's kind of one of the things that is a little bit hard to understand early on, that you could be doing the same thing every single day, but your profits vary. So some days are going to be big winners and some days are going to be big losers, and you're not really doing anything different. It's just the difference is what's happening with the overall market. So, and I guess another thing to mention there is that sometimes you can learn bad habits, because you can break the rules but make money because the market just happens to be really strong. And if you do that on a day when, the market's weak, that breaking that rule is going to get you into trouble. So, so let's see. So Smith, so a bunch of trades here, and you can see I traded a lot today, 103 total trades, 200 and something thousand shares, 220,000 shares of volume. I traded a lot and I don't have a lot of profit to show for it. So, that's kind of the thing that to me, I was like, all right, at this point, I'm just churning shares. I'm working for the broker more than myself. I just got to throw in the towel and be done. When you trade this much and you're not really making progress, it's a good cue to just, be done. So I kept my max share size today at 10,000 shares. Warnings here, 10,001. I don't think I exceeded that. If I press an order that's more than 10,000 shares, it's going to pop up this warning sign for me, and I can override it or choose not to. So let's see. So trades on SMIT, MTSL, this one. So I was in MTSL at 344, 345. Tried to scalp it up to a high of into the 50s. Again, that was only a small winner. It was like $600 there. 10,000 shares, wasn't that exciting. Trying to sell on the ask, not getting filled, having to cancel the orders. Just piecing out in really small sizes, as you can see here, sort of unnecessarily so. I think on this one, I was selling on the ask, trying to reduce the loss because it had dropped down and was popping back up. Got back in at 45, sold at 51, but again, these are really small wins. Like they barely justify the risk. SMIT back in at 95, 5,000 shares, stopped out at 62. So that was that big loss there, the one big one of the day. MTSL got back in here, 10,000 shares at 50. Again, there's just so many trades, it's kind of hard to look at each of them individually, but this is as it was curling back up right here. I got back in at 50. It popped up to a high of 69, was waiting for 1 minute micro pullback, and it failed. So, that's just kind of the thing that's a little bit tough. One of our students sent me a message today, Joseph, he was asking about, how to deal with the kind of fear of losing. And so one of the things, we've had a number of traders over the years, kind of have this issue. The one trader that I remember the most kind of distinctively, he was a pharmacist for his entire adult life, and he had his own pharmacy and he sold it, and now he was retired and he was doing a little trading to make a little bit of money. And for him and his whole line of work as a pharmacist, he just had this belief ingrained in him that he could never make a mistake. He couldn't make a mistake. You make a mistake once as a pharmacist and something really bad could happen, right? You give someone blood pressure medicine when you mean to give them, something else, and, a vitamin, and, it's bad news. So he just had this really strong belief that he could not make mistakes. So that caused him as a trader to do a couple things. Number one, it caused him to hesitate because he wanted to be 100% sure it was going to work. And the reality is in the market, there's never 100% certainty. So he had the first issue of hesitating. And then the second issue of when he took a trade and it was going down, he didn't want to sell it for a loss because, once you press the button and sell it and take the loss, you're wrong. You've now made it official. But as long as you're holding the trade, there's always the possibility that it could go back up, right? And so he had these two problems. One, hesitating, and two, holding losers too long. And so what I encouraged him to do was to focus on going through the emotional conditioning of getting good at losing. Now, I'm kind of a guy that's gotten good at being a loser because I'm a loser every single day in the sense that I'm always going to have losses. I'm never not going to have a loss. I mean, and maybe, we can look at my TraderView stats. Maybe there'll be times here or there where I get lucky and, I don't have any really big losses. This is my win rate for the last 30 days. So 87% is the best day. So that means every day in the last 30 days I've had at least one loser. Now, if I go back further than that, maybe we'll see a couple days in here. Okay, so I've got out of the last, now we're going back a little further, but out of the last now 30 days back into June, I have 3 days where I had 100% success. And the remaining 27 were days where, I did have at least one loser. So being a successful trader does not mean not losing. That's not realistic. It's not a realistic standard to hold yourself to. It's not. It's not. So you have to get good at losing, and that means being quick to take the loss. And so one of the things that I encourage you guys to do is do some emotional conditioning to experience loss and to be okay with it. So here's 2 ways that I've encouraged students to do this in the simulator. So you're trading in the simulator, and number 1, when you're trading, you got to trade with small size. All right, so you trade with small size because when you trade with big size, inevitably the emotions flare up. You get more of the emotions, you get more frustrated when things don't work. When the dollar signs are bigger, we always get more emotional, and this is the same for me. So first step is to reduce your share size to like 100 shares. And trade with 100 shares, because when you lose money with 100 shares, like look, today I lost 50 cents per share on TRT. 50 cents per share, but it was only 200 shares. So it was only $100. I mean, it's kind of a big loss, but it's really, that amount of money doesn't mean anything to me at this point. It's not a big deal. So you want to trade with an amount of money that is not a big deal for you, where you're like, look, I could care less. I'm down $14 today. It doesn't matter. And you do that for a month. And during that period of time, you're going to just focus on trading the right way, because the amount you make or lose is no longer significant. It's not going to change your life. It's not going to mean you can't pay your mortgage. It's not going to mean you buy a new car. It means nothing. It's, of course, in the simulator, it really means nothing because it's not real money. But then what I always do is I would say do that for a month in the simulator and do that for a month with real money, and prove to yourself that you can start focusing just on trading the trade the right way and not worry about, really how much you make or lose. And that does mean that during that month, you might lose money on commissions. Okay, so say, look, I'm going to give myself, $500, this month, and I can lose the $500 in commissions. I don't care about how much I make after commissions. I'm focusing on before commissions, because commissions when you're trading with 100 shares are a huge piece of the pie, but when you're trading with 10,000, they become minuscule. So don't factor in commissions. Just don't worry about that for right now. Focus on conditioning yourself to take that loss and take it quickly. So the first thing is trading with small size. And then the second thing is to use live stop orders. Even though I personally don't like to use them, if you used a live stop order, let's say on small caps that was 10 cents or 15 cents, if you're getting in at the right point, you're getting in at the apex point, these stocks aren't going to look back. Now, if you get in at the wrong point, they might pop up and drop 15 cents and then go, and that says you didn't get in at the right point. But if you get in at the right point, they just take off and they go. So like Smith, for instance. This one this morning, if you had set a 10-cent stop on it and you bought it at 85, something like this popped right up to a high of 409 without looking back. So right there is like 15 cents of profit. And of course, you could cancel your stop order and sell it and take the profit, and you're done, right? And that would be fine. A stock, some of these ones that we've looked at, MTSL or MDGS yesterday, some of these ones, they just take off and they just go. And so that 10-cent stop on a home run, on an A quality trade, you're not going to get stopped out. On trades that pop up and drop down and then go, you'll get stopped out. And the reality is sometimes that's for the best. Because look at this. Let's say on this one, you got in at 90 and you had your 10-cent stop. It stops you out at 80. Well, I stopped out way down here at 60. So stopping out at 80 with a 10-cent loss is not a big deal. And by making it automated where you're using the stop order, it kind of conditions you just to be like, well, the computer stopped me out. It wasn't even me. It kind of takes the hard work of pressing the sell button and you delegate that responsibility down to the computer. Let the computer handle the hard work of realizing the loss. So you're in the simulator, you can go to the hotkeys, you go add hotkey, scroll down, stop, let's see, so do a stop order to sell long position with average price. So this would stop out your order at your current average price. So for instance, I'll just say, I'll set this to Shift S for Shift S to stop order. Okay, so that's going to be my stop order. So now if I go to a stock like, like BioC, I'm holding 500 shares in the simulator, whatever. So I am holding the 500 shares. My average is 601, but the current price of this stock is, is obviously higher than that. And I might have to log out, log back in. My quotes aren't loading. Let's see, BioC, what's the price? 646. All right, so I press, Shift S, and now I'm going to have a stop order on this stock right here. Now I've got a stop sell order at, 601, my average cost. All right, so that's the stop at break even. I'm going to cancel that order. If you want to do a stop 10 cents below the bid or something like that, you go to add hotkey, go to stop order, and then where is it? Stop order. I'm just looking for this. Stop order, sell long position with average price reduced by. Okay, so I think this would be selling 10 cents below your cost basis, and then the other one would be to sell below the bid. Where is that? Stop order to sell long position on the bid, and then we reduce by 10 cents. So this would be the one to, once again, I got to do this. Okay, so I'm just going to do Shift D for right now. Okay, Shift D. And I'm going to save that. All right, so now I've got a hotkey on Shift D to sell. Let's go to another one I'm up on, Jaso. This is solar stock. So on this one, if I press Shift D, I'm going to have a stop order 10 cents below the current price. I don't know why my quotes aren't loading here. I'm going to have to log out and log back in, but I'll just press Shift D. So now I've got a stop order that's down 10 cents. So the advantage here, and it's for the full size. So the advantage here is that you're sort of delegating that responsibility to the trading platform. So you just get stopped out, and it's like, oh, I got stopped out. It is what it is. Now, the reason I don't do that with the way I trade is because, number one, when you put out stop orders, market makers can see them. So if I put out a stop order on a 15,000 share position and a market order can see that, they may try to do stop hunting, which is where they try to flush the stock down to literally pick up my shares, and then the stock rips back up. So that starts to happen when you trade with big size and when lots of people have stop orders out. So for that reason, I avoid using them. But for small size and for a beginner, in terms of going through this emotional conditioning process, it's a good technique just to get yourself comfortable with experiencing loss. Because ultimately, I lose every single day, and that's okay. That's part of this career. It's not part of the career as a pharmacist to make a mistake and lose money every day, but it is part of the career of a trader. So you just have to get good at it. So practice makes perfect. All right. So anyways, that's about it for me here today. $811. It's just not nothing to write home about, but that's a green day. I'll take it, and I'll be back at it first thing tomorrow morning. We'll try to finish up this week strong with hopefully a couple more winners. Tomorrow will be the 132nd trading day of the year. And I'm sitting right now with about almost $20,000 of profit on the week, which is awesome. So, if I can get another nice day on Friday, well, I'd be happy with that. All right, so that's the game plan. Those of you guys watching on Facebook, YouTube, feel free to leave some questions, leave comments below. I'll come back and answer them later. You enjoy the videos, give us a thumbs up, and I'll see you guys all first thing tomorrow morning. All right, see you all in the morning. If you're still watching, you must have really enjoyed that video. So why not subscribe and get email alerts anytime I upload new content? Remember, when you subscribe, you become a member of the Warrior Trading family.